Hello everyone and welcome to today's webinar. Today we're going to be diving into the reasons people fail building business credit, and we're going to talk a little bit more about how you can actually be successful. Now I'm doing this topic today because I get a lot of questions about this, whether it's comments on my YouTube channel, whether it's email questions. A lot of people say to me, Ty, I'm trying to build my business credit and I'm running into these complications. And what I found is that almost every complication that somebody runs into in building business credit usually is caused by one of these three reasons. There are three really core reasons that probably 95% of the problems I hear about fall into. And I thought it would be a great topic of a webinar just to break this open, talk about these three problems, and then talk a little bit more about what you can do as a solution so you don't get caught up, so you don't fail, so you do succeed in building business credit, and you can avoid these three roadblocks, these three obstacles, these three hurdles. So before we dive in too deep, let me first introduce myself. If you've never been on one of my webinars before or seen one of my videos, my name is Ty Crano. I'm the Director of Business Services here at Credit Suite. And what I do is I help companies offer business credit and financing to their customers. So I have a website right here, creditsuite.com/business credit. If you have any interest in getting business credit financing for yourself, offering it for your customers, feel free to check that out. But my webinars and videos are really not sales pitches. There's no pitch here at all. It's just going to be free content, a ton of good information that's actionable that you could use right away. So I have a ton of experience in business credit financing, about 16 years now. I've written a couple books, and you can find me everywhere online if you're at all questioning my credibility. But enough about me. Let's go ahead and jump in. So first I want to talk to you a little bit about what business credit is. A lot of you on here are still a little bit fuzzy on what business credit is. Talk about the benefits on why you'd want it. I'm going to show you some actual business credit results so you can see exactly the kind of credit that you can really obtain when your business credit's built. And then we're going to dive into these three problems and basically dissect them so you have a good idea of what these obstacles are and exactly how you can overcome them. So business credit itself is basically, when we talk about business credit, or sometimes it's called corporate credit, this is credit that's obtained in a business name. So the business builds its own credit profile and score. Now, you're obviously familiar with your own personal credit, right? Someone pulls your credit based on your social security number. Well, with business credit that's not linked to you, it's linked to your business. So you could give somebody your EIN number, and they can pull your business credit profile based on that, much the same as they can pull your personal credit profile by using your social. So with an established business credit profile and score, the business itself can qualify for credit, much the same as you can as an individual. You use your personal credit to get store credit cards and Visa, MasterCards, and homes and all these different things. Well, ironically, you could do the exact same thing with business credit, whether it be credit cards, credit lines, whether it be loans, whether it be commercial real estate. All these type of things can be obtained using your business credit as well as your personal credit. Now, again, this is credit that's based in the business name. So it's based on the business's ability to pay, not the business owners. So this is one of the things that people really like best about business credit is since the business itself qualifies for credit, then in a lot of cases there's no personal credit check required from the business owner. So this works really well with our clients because a lot of people that come to us have credit issues. They have sometimes severe credit issues, bankruptcies, judgments, tax liens. And when business credit is built properly, you could build it completely separate from your personal credit. So your personal credit really has no effect or no impact on your ability to build corporate credit. So once you obtain this credit, then you can start getting, store credit cards, Staples, Lowe's, Home Depot, Walmart, Target, Costco, just about most major retail stores, BP, Chevron. Most of these companies also offer business credit. And once your business credit profile is initially established, you can start getting approved for this kind of store credit. You can also get loans, credit lines, most of the same type of financing you can get using your personal credit, you could use your business credit for. So benefits, ton of benefits. First which is a credit profile can be built that's completely separate from your business owner's personal credit profile or from the business owner's personal credit profile. So if you think about it, that gives you double the borrowing ability. Now, not only can you get a Staples credit card using your personal credit, you can also get a Staples credit card using your business credit. You can get a Target credit card for your business credit. You can get all these same credit cards you have on the personal side, but you can also get them on top of your personal cards on the business side, giving you really more than double the borrowing ability. Plus, business credit scores are based only on whether a business pays its bills on time or not. So because of this, business credit can be built much faster than personal credit. As a matter of fact, in the consumer personal credit world, it takes you 6 months of building credit to even get a score. In the business world, you can get a few trade lines and get a score in 30 to 90 days. In 6 months, you can start getting $10,000 Visa MasterCards in your business name. So you can build business credit very, very, very quickly because mainly this one factor. Scores are only based on how you pay. So all you have to do to get a good score is get some accounts and pay as agreed, which we're going to talk about a little bit later in this webinar. Once you do this, you have a profile, you have trade lines, you have a score, and then you can immediately start getting store credit cards with that. So it's very quick. 30 to 90 days, you get your initial revolving store credit, and in 6 months, you could build this to a point where you're getting $10,000 Visa MasterCards. It's really probable that in 12 months or less, you can start getting $50,000 plus credit lines or credit cards. We see a lot of our clients reach that level within a year or less. So approval limits are much higher on business credit accounts too than personal credit accounts. As a matter of fact, I love this coming directly from SBA because this is a great point SBA makes, is that based on statistics, you're seeing about 10 to 100 times higher credit limits on business than personal credit. So that means if you get a $2,000 credit card at Staples using your personal credit, in the business world, you could usually get $2,200 to $10,000 on the business credit world. So not only can you get more credit on top of your personal credit, but your limits are just significantly higher. So when done correctly, another benefit of business credit is it can be done without a personal credit check. So regardless of your personal credit quality, you can get approved for business credit. Now, right here is where people have some skepticism. They're like, I don't know about this whole thing because, the minute you hear that you're able to get something with no credit check, that immediately in our society breeds skepticism. But the way I explain it is it's kind of common sense if you think about it. You've never applied for a personal credit card before, ever in your life, where the lender said, I have to pull your business credit first. It's never happened because there's no reason for them to pull your business credit profile if you've got a personal credit profile established. Well, it's exactly the same thing in the business world. If you have credit established linked to your EIN, there's no reason for them to pull your personal credit. It really, if you think about it, it makes no sense. If you have established credit based on your EIN, there's no reason for them to pull your personal credit. So this is why no matter how bad or severely damaged your personal credit is, you can still build business credit freely because this is credit that's linked to your EIN, and when you're doing it correctly, you're not even using your social security number to get approved. Because again, we're going to talk a lot about a little bit later in this webinar. So another benefit is that most business credit can be obtained without the owner taking on personal liability or personal guarantee. This means in case of default, the business owner's personal assets can be pursued. Now, this is a tough conversation to have with a business owner. I was doing a speaking engagement a few months ago, and there was, 250, 300 people in the room, and I said, hey, how many of you expect to fail within the next year? And of course, as you can imagine, nobody raised their hands. Well, this is the perception. Most business owners don't expect to fail. So they don't really think about them using personal liability to grow their business because they don't think about failing. But statistically, over 90% of businesses do fail. And when businesses do fail, what happens is collection companies come after your business assets first and your personal assets second. So for your sake, for your family's sake, for the security of your family, the financial security of your family, you want to make sure you're not giving them liability for your business debts. It just makes no sense, especially when done properly. You can get more money than you've ever imagined getting without taking on that liability. It's important to understand that when you give them your social security number and you take on personal liability for your business debts, this is a decision you're making. It's completely voluntary. It doesn't have to be that way. You can easily get approved for credit based on your EIN that's not linked to your SSN, which means that you're not personally liable. And again, those are some of the things we're going to talk about in this webinar. So when a business owner applies for financing, their business credit is reviewed. And a lot of people don't know this. So when you don't have business credit established, in a lot of cases, you're going to get declined for financing. But the problem is there's no regulations that state that they have to tell you this. So let me kind of explain this a little bit deeper. There's a law called the Fair Credit Reporting Act. And the Fair Credit Reporting Act basically states that every lender must give you notice if they turn you down because of something they found on your credit report. So if you went in and got a car and you got denied at a bank, they sent you a letter and said, hey, we declined you. We didn't like stuff on your Equifax credit report. So you always know they're pulling your personal credit because they tell you they are. But in the business world, there's no Fair Credit Reporting Act. There's no requirements for them to notify you. So what happens in a lot of cases is business owners go into a bank and apply. They get denied because they don't have business credit established. The bank never tells them. They never tell you that that's the reason why. And then you have no way of knowing that that was the reason. So you have no way of fixing the problem because nobody tells you what the problem was. Well, it happens 100% of the time. You're never going to apply for business credit or financing where they don't look at your business credit report. Just as you're never going to go get a car loan or a home loan without them pulling your personal credit. It will happen 100% of the time. Well, it's important to know that in the banking world for business, it's exactly the same way. 100% of the time, they will pull your business credit, and that will determine your approval or your decline for that financing. So let's take a look and see what's actually possible with business credit. Now, these are real approvals from our clients that we've seen get approved for business credit. So you can kind of see how business credit works. So for example, this is a $6,000 Citi credit card here. Now, on another example, this is another one from U.S. Bank that's got a $4,800 limit credit card. These are the kind of credit cards you can start getting 4, 5, or 6 months into a business credit building process. Here's one for $15,000. Now, the approval limits in business credit are based on the existing limits you have. So as you build business credit, your limits get higher and higher and higher. And in about 6 or 7 months, you can reach a level with business credit where you're getting actual approvals like this for $10,000, $15,000. We even have, I was talking to a client the other day, and he had a $50,000 credit card that he'd obtained, been going at it a little less than a year. So here's another one for $16,000, completely different bank, this business credit account here. And here's another one for $22,000. So you can see this is why you build business credit. The beautiful thing about building business credit is to get access to this kind of money without using your personal credit. I think just like so far, I just showed you like 40, 50,000 in credit that you could get. This literally is the exact kind of credit you can get in about 6 months' time or so when you're actually building your business credit. Here's another approval for a whole different bank for $22,000 right here too. So you could definitely see that you can absolutely get business credit using your business credit profile and score. So why can't you? Why would you fail? Well, there's 3 main reasons people try to build corporate credit that I found and fail. And see, there's kind of a myth out there that's not really accurate at all. And a lot of people think, and I'll use this example. If I say to you, well, hey, look, do you think Bill Gates personally signs for all of the money that Microsoft gets? You might say, well, of course not. Well, why? Because he's Bill Gates. Well, this is the perception. People think that companies that are big, and that's why they get credit with no liability without giving the social, because they're big. That's not true. Companies, it's actually the opposite. Companies get big using business credit to get there. Walmart's a perfect example. Over 80% of the cash injection in that company comes from business credit. They used business credit to get that big. It's not that they're getting business credit because they're that big. It's just when you get to a certain level in your business, you get a CFO. You get financial savvy people that know how to do this. A lot of people don't know how to do it, but what's really interesting is business credit can be built for you regardless of whether you're a startup or Microsoft. It's just a matter of knowing how to do it. And this will be a whole different webinar. I've got plenty of stuff on my YouTube channel that will show you the steps to building business credit. But as you go through this process of building business credit, there are 3 obstacles that we really commonly see that can absolutely stop you in your tracks. And they're really actually fairly easy to fix. So the first of these problems is that people apply and their business isn't set up credibly in the lender's eyes. So everybody jumps in and they start trying to get business credit, but they haven't set up their business credibly. They haven't set up their business with a structure where lenders will actually approve them. So when we help companies build business credit, it's the very first thing that we do is we help them build their business credibly in the lender's eyes. Now, what I mean by this is very simple. I mean, I'm going to tell you right now exactly what lenders are looking for. Lenders, you fill out an application, you give them the application. The question is, what are they looking at in that application to determine whether you're approved or denied? Well, that's exactly what I'm about to show you. Well, it's essential that you have to build business credit and make sure that in building business credit that you set up your company credibly, because the perception lenders have is really critical to whether or not you're approved or denied. So before applying for business credit, you must ensure that your business meets these lenders' credibility standards, or you're just not going to get approved. Now, there's actually over 20 credibility points that are necessary for a business to have a strong, credible foundation, and all of these are available in our business finance suite, but the main ones I'm going to go through with you right now. So one of the important things that lenders look at is your business name. It's important that you use your exact legal business name when you're applying for business credit. So that means if you have a DBA, your DBA needs to be included when you actually apply. Okay, there is a difference between ABC and ABC Incorporated. There's a difference there. So if your full name is ABC Incorporated, then you have to make sure that's in your name. And a lot of states require that. A lot of states won't let you just have a company named ABC. They require that you have Inc. or Corporation or something at the bottom. So that means that is your full legal name. You can't just apply for ABC. You have to apply for ABC Incorporated if that's your true legal name. Your full business name has to be included, including any DBA filings you have. So you have to ensure your business name is exactly the same also on your corporation papers, your licenses, your bank statements, everything that you have. Now, if you hear me take a pause, I'm taking a swig of water. So we have somebody that works on our team who's one of the leading bankers in the country with Wells Fargo. And she talks about this all the time, that one of the biggest reasons she sees that people got turned down at Wells Fargo was they would go to look up the company's business credit and the name wouldn't register. They gave them ABC instead of ABC Incorporated. The lender would search ABC, not find them, and they were done. They would decline them. So literally the lender, they will not approve you if they can't find you, and that's what's really going on here. Even though you might think they might search ABC Incorporated just because you put ABC, they won't. They're not going to search anything that you don't give them. So you have to make sure your exact legal name is on all the documents you have, and it is also the exact same as what you're actually putting on your application to apply. Now, you can build business credit with almost any corporate entity type. And what I mean here is sole proprietor or incorporation or C Corp or S Corp or LLC. You can build business credit based on any entity type. Okay, so it doesn't matter what entity you have. But you have to keep in mind, if you truly want to separate business credit from personal credit, then you can't choose a sole prop. You can't choose a partnership. You have to choose a corporation, like an LLC. This doesn't have anything to do with business credit. Nothing to do with business credit. This has everything to do with what the entity is. Okay, an LLC is a limited liability corporation. A corporation, this means that the profits from these kind of organizations don't carry over to your personal credit. When you're a sole proprietor or a partnership, the entity type you've chosen makes you personally liable for your business debts. It's just the way that it is. The profits from the company will carry over to your personal tax returns. You are personally responsible for all of your debts. So you might want to consider, even though you can build business credit under any entity, you might want to consider a corporation or LLC, because only these type of organizations, a corporation basically, can eliminate that liability. Otherwise, you're still going to have that liability. So corporation, LLC, S Corp, C Corp, those are the ways you want to go to eliminate your liability, even though you can build business credit based on any entity. So whether you have employees or not, you've got to get your EIN number. Now, this is one of the absolute basic necessities that you're going to see, that every source requires. There are two things that every single source you apply with is going to require before they'll approve you, and EIN is one of them. Okay, plus you're going to need them, for your bank statements or to set up your bank account or anything like that. Now, if you're not familiar with an EIN, this is like your social security number for your business. It's how the government recognizes your business. So you can easily go type online how to get an EIN for my company, and you'll have like a million results that will easily show you how to do that. So your tax ID is used to open your bank account, to build your business credit. It's used for a lot of different things, but you've got to have that EIN before you start to apply. You also need to make sure that the EIN you're putting on the application is correct. It sounds kind of crazy, but you know, I've done this before. I wrote down the tax ID number on a piece of paper. It was one from the wrong company, and I used that piece of paper every time I went to put my tax ID number on something. It happens, especially if you manage a lot of businesses or oversee them or have part in them. So you really need to make sure before you apply that you are using the right EIN, or it will create serious complications. So you've got to also make sure that you have a real brick and mortar building that you're putting down there as the business address. So this has to be a deliverable physical address. It can't be a home address. It can't be a PO box. It can't be a UPS address. Some lenders will absolutely not approve you unless this criteria is met. Okay, so it's very important that you make sure that you have, or at least using on paper, a real physical address. They will know if it's a UPS address. They will know if it's a PO box. And sometimes you think they might, but they do. Our finance suite has the same technological checks that the lenders use. We know immediately. The minute you put in your address, the minute you put in your phone number, we tell you immediately whether it's a personal or business address or phone number. They know. So you've got to make sure you have a real physical address. Now, there are solutions. I'm not telling you that you have to go out and get a physical building. There are solutions that can help you here. And these are called virtual address solutions. Now, a lot of people ask me, Ty, how do I get a virtual address set up? Simple. Go to Google. Type in virtual address. You'll pull up all kinds of companies that can help you. One of the most popular is called Regus, R-E-G-U-S. Regus is the one we use, and they're the most common out there for helping you set up virtual addresses. Now, with one of these kind of solutions, you can receive mail and packages at your address, and then they'll basically just forward you the mail. Or they'll give you a full virtual office. I mean, you could have a full office with dedicated phone, fax, receptionist, everything. Okay, and one of my buddies had one of these, and you walk in and you're like, man, this is a massive office. He's got all these receptionists, really nice sitting areas, and all he's doing is just renting a physical office in that location. Okay, you don't have to do that. You could just get your mail there, or you could get a full physical office, or you could get your own office, like full-time, where you rent it all the time. Now, he had his set up where he just needed a conference room. So he scheduled meetings there, and we'd go to his office, and it would make him look really professional, and we'd go to his conference room. But you could take another step and have a full physical office in these places too. But whatever you choose, especially address only, is a good option. You just basically pay a little bit of money a month. It's maybe not a little bit. It could be $50, $100. But then you have a physical address in like a high-rise building in Tampa, Florida, and all you're doing is getting your mail there, and they forward you the mail, and you just use the address to apply for credit. It really works. But you've got to make sure you're using a business address. A lot of lenders just won't approve you if you're using anything other than that. Okay, so you also need to make sure that you have a number listed with 411. It's important. Okay, I told you earlier there are two things every lender looks at before they lend you money. One is that you have an EIN. One is that you have 411. So the hardest part of building business credit is getting your initial credit accounts, which we're going to talk about a little bit later. And how you get those is this is what they do. They look at your EIN. They look at your 411. You have to be set up with 411 to be able to get approved. Okay, everybody looks at this before they approve you. So you really want to make sure you use, it doesn't matter if it's local or toll-free. If you have a local number, make sure it's in 411, absolutely, and then try to get your toll-free number there also. Now, I've had people listen to my webinars before, and they say, well, Ty, I don't know how to get it listed with 411. Well, there's a company out there called List Yourself, and that's who we work with. So List Yourself is actually integrated in our system, so it's like a free service for our clients. We pay the bill, and I don't know how much it is, but it might be expensive for you to do. You might want to at least look into it. But believe it or not, you just can't go out and easily get your number listed with 411. I thought you could at one point in time, but then you can't. I tried on my own. It's hard to do. So you've really got to use a company like List Yourself to actually get your number listed. But this is a crucial step you have to take before you start applying. So you also need to make sure that you have an 800 number, okay? Because look, if you're doing business outside of your area, you need to be set up credibly. Now, we had a client once that owned a pizzeria. He just stopped. He's like, he didn't go any further in his business credit building process. We asked him why. He said, I don't have a toll-free number. We don't need one. You're a pizzeria. You know, I mean, it's kind of obvious that you're going to be working off of a local number, not one that's toll-free. But if you're doing any kind of business anywhere outside of your local area, you really need to make sure you have a toll-free number. You know, even if you have a home-based business, it's fine. It still provides the perception to a lender that you're a bigger company. And I guess that sentence really sums it up. The perception that you are an even bigger company. The beautiful thing about business credit is that when you're applying, they don't know how big your company is. So all these things I'm telling you give you the perception of being a really professional big company. You know, having an 8 toll-free number, having a professional office at a place like, you know, a high-rise type building. These type of things give the perception to the lender that you're a really big, successful company, and that's how you can really maximize how much money you get. And keep in mind, it's incredibly easy and inexpensive to set up a virtual phone number. I mean, you can get a phone number nowadays at a place like Ring Central, and it costs you like very, very, very little money in a month to be able to actually get that. Okay, I think you can get it for like less than $10 a month to get a toll-free number. So it's an easy step, and it means a lot when you're going through the process of actually applying and getting money. So a cell phone or home number cannot be used, okay? They can't be. If you use them, the lenders will know immediately that you're using them, and it can even get you flagged in the system as an unestablished business, and that's really hard to get past. So don't even try to go out and get money using a home phone or cell phone. Again, they have the same technological checks we have that will tell them immediately whether you're using a home phone, cell phone, or business phone. So don't give them those numbers or you'll get turned down. Now, if you want to get your business phone calls on your cell phone, no big deal. Get a virtual phone number from Ring Central. It's really cheap to do. And just, you know, forward the calls to your cell phone so you can still get them on the fly. It's easy to do. But you need to have a phone number that you use on your application. Otherwise, it's just not going to work. You're not going to get approved. So lenders perceive a credible business as one with a fax number. So as a business, you need to have a fax number to send, to receive important documents, and you can easily set up an e-fax if you don't want like a fax machine. So you just need a fax number on the application. And nowadays, you can go to Ring Central for less than $10. And I'm not, you know, propping up Ring Central. It's who we use. You can use anybody you want. But with them, you can easily get fax as part of your package. So for like less than $10 a month, you can get a toll-free number, and that toll-free number can be a fax number also that you can receive faxes on, which is really pretty cool. And the faxes are like e-faxes. They just go to your email instead of a physical fax machine. So you don't even need a physical fax machine to get something like that set up. You need to have a professional website, okay? It's important. The best thing to do is to make sure that lenders get all the information they need about you from your website. We had a client turned down for financing the other day because he had actually had the same, like his company had like several branches, and he decided not to put his branch website on the application. And the lender went and looked at the main site they thought was his. That branch was going out of business and had a big sign up about going out of business, and they denied him. Now, we ended up getting him approved. We just had to verify what his website really was, but it's just a perfect example of how important your website is. It really can determine your approval or denial because lenders will want to know more information about you, and they're going to go to your website. So now start putting all the stuff together. They see you have a toll-free number, fax number. They see you have a really professional website. They see you have a nice business address. Those are the type of things combined that will really help you get approved and get approved for the most amount of money. If you don't have a website set up or even one that looks decent, well, then it's going to be serious problems. You're probably going to get denied. And there's a lot of places you can get affordable websites set up. I mean, you can go to GoDaddy and get a domain and hosting and basic website templates there and other places fairly easily nowadays. You can even go to places like odesk.com, Odesk, O-D-E-S-K.com, and you can find like web people for really, really, really cheap rates to be able to put up websites for you. But don't try to go in and apply for financing without a website first. This is one of the things you really are probably going to need to do business. Lenders know that. It's one of the things they're going to look for. They also need to make sure that you have a professional email address set up for your business. Okay, it's not only professional, but it greatly helps your chances of getting approved and getting a thumbs up from lenders. Okay, so setting up a business email address is it's easy and it's inexpensive to do. As a matter of fact, if I just mentioned, if you go to GoDaddy and set up a domain, nowadays you can get a domain set up and you can get an email address set up at GoDaddy for like $7 or $8. It's like ridiculously cheap to be able to do. So it's something you can definitely, absolutely do at a very affordable cost. And that's why you really want to make sure that you get that set up. You want to avoid using free email services like Yahoo and Hotmail because this doesn't look good. You know, if you're putting on the application that your email address is partychick2009@yahoo.com, you're probably not going to get approved. And believe it or not, a lot of people try to do stuff like this. You just can't do it. They're going to look and they're going to expect to see a business address. So, for example, my email address is ty@creditsuite.com. That's a professional business address that's linked to the same domain. That's our main domain. You can easily do that through GoDaddy or most places you can buy domains through. It's cheap. It's actually free as part of the domain in a lot of cases. And it obviously looks a lot more professional than partychick2009@yahoo.com. So the email address should be like your name, yourcompany.com, for example, like ty@creditsuite.com. So here's support@yourcompany.com or johnsmith@yourcompany.com are really good examples of exactly what I'm referencing. So it's also essential that you get your bank account set up right away because a lot of people don't know this. But, you know, nowadays, a lot of creditors, a lot of lenders look at the date that you set up your bank account as when your company was actually started, not your date of incorporation. So this banking history really is vital to your future success of being able to get credit and loans. So the date that you open that bank account is the date that a lot of these lenders are looking at and seeing that that's when your corporation actually started. Now, the reason they do this is because of shelf corporations. A lot of people have tried to shortcut the process, and they go by these shelf corporations, which are just corporations that people buy the names and set them on the shelf and then sell them years later for all this money. Well, lenders are keen on this. They understand what's going on. So what they're doing now is looking at your bank account start date instead of your incorporation date is when your business started, which is why you need to get that bank account opened as soon as possible. So again, if you incorporated your business 10 years ago, but you just opened your bank account yesterday, then your business just started yesterday in the lender's eyes. And this is why it's just absolutely crucial that the longer you have your business bank account open, the better your borrowing potential is going to be, period. So having a high account balance is essential in obtaining an excellent bank rating, which is also important. A lot of people don't know this, but you have a credit score in your business that's just linked to your bank account. And every loan you ever go to apply for from a conventional bank, they look at this bank rating. It's like a really secret score that most people don't even know it's there, and most people don't even know how it actually works. But what it's mainly based on is your account balance. To get the highest bank rating you can get, you need to have $10,000 or more in your bank account. If you have less than that, then that's okay. You're just going to have a lower bank rating, depending on whether you have $5,000 or $7,000 or $1,000 will determine your actual ranking. So your bank rating is essential for approval in financing. This really isn't as important for business credibility. It's important that you're consciously aware that it's there, okay? But it's not essential to get approved for your initial credit. It's just, again, it's important that you know it's there and you try to keep a balance of $10,000 or higher for the highest bank rating. That's easier said than done, right? I mean, a lot of business owners can't just throw $10,000 in their bank account and leave it there. And the majority of people starting out can't. So again, don't feel this is a crucial requirement to get your initial credit. It's not, but it is something down the road lenders are going to look at to start approving you for loans and such. So it is something that you really, really, really should consider getting set up, being aware of your bank rating, and trying to keep the highest balances you can in your bank account, because that's really going to be crucial to your ability to get a large amounts of money in the future. Now, one of the most common mistakes when building business credit that we see is that the company that you're putting in doesn't match the address on your business licenses. Even worse is that some people don't even have the required licenses that they're supposed to legally operate. So for example, if you're a licensed contractor and you try to get business credit with no license, well, then you're probably going to fail because they don't want to deal with a business that's not legit. And if you're in business with license requirements that you're not meeting, then your business just isn't legit. So you've got to make sure that whatever required licenses you have. And just the same as we talked about earlier, your corporation papers, your bank statements, all of these things need to have the same business name, same business address, including your licenses. So you got to contact your state, your county, your city government to see if there's any required licenses and permits to operate your type of business or any business. Okay, so a lot of counties have an occupational license where just to do business you need to have a license. California is like the license king state. Like they want to get as much money as they can, so they have like licenses for everything that they charge you for. So you need to know in your area what licenses you're required to have, whether it's an occupational licenses or an industry-specific license like a contractor license. You need to make sure that you have those proper licenses. So state business filings need to be listed correctly. Name, address, county license permit filings, city license permit filings, IRS filings. All of these things you need to make sure have the proper name, have the proper address, because that is exactly what lenders are going to look at. And believe it or not, if they can't match things up in the record you're giving them, they're just going to deny you. They're not going to sit there and try to figure it out. They're just going to decline you. And again, it's one of the most common reasons for denial that we see. So take the time, verify that the state, IRS, bank statements, 411, that have all of these have your name listed with the exact correct legal name, okay, and that it's all spelled correctly, correct address, those type of things. And also take the time to ensure every bill you get, your electric, your power bill, has the business name listed correctly and comes to the business address. Because, again, what they're looking for here is uniformity. And I remember this when I was a mortgage broker. This would always catch us up on some deals because somebody would still get bank statements under an old address, and the lender would make us verify what was going on. They say, well, look, this is the person's home address. They get all their stuff here. Why is this going to a separate address? It's the same thing in the business world. You have to make sure that all of your bills are going to the same place. They all have the same name. They all have the same address, that all of that is consistent. And if it's consistent, there's no questions. The minute there's inconsistencies, the lenders have questions, and when lenders have questions, that's basically just a green light for denying you. So that's really an in-depth look at the first reason that people fail building business credit. It really gives you a good idea of exactly why people fail in building your business credit. So now let's jump in. Let's talk about the second big reason that people fail building business credit. Because if you've set up a business credibly, if you've made sure your business is credible in the lender's eyes, then you stand a really good chance of getting approved. But there's another really big obstacle that you can run into, that people commonly do run into when applying for business credit, that can easily get you denied, where you don't have the ability to actually get the credit you want. And it's really easy to fix. Here it is. People apply using their Social Security number. And this is a big no-no. If you go in and try to apply for business credit, putting your Social Security number on the application, then you stand a very, very, very good chance of getting denied. So don't apply using your Social Security number. You always want to apply first for this credit without using your Social Security number. Now keep in mind, a lot of vendors are going to request it. Some will even tell you on the phone they need it or have to have it. But you need to submit the application first without it. Okay, so there's a couple things I want to say here. First of all, many people that you're talking to at these credit sources don't even know themselves that you can get approved without the Social Security number. We had one of our clients that went in and followed the protocol to get approved at Macy's. They went in the store, they talked to the customer service person. The customer service person had no idea what they were talking about. So the customer service person got their manager, and the manager said, I know something about business credit. I think we have something like that, but I'm not sure exactly how it works. Let me call my regional manager. They called the regional manager. The regional manager said, oh yeah, we definitely offer business credit, but I'm not sure the process for approval. Let me make a call. Regional manager calls their boss. Their boss says, yes, we have business credit. Here's the process to get approved. That's how far up the chain that person had to go to even get to somebody that was knowledgeable about what they're talking about. So if you go to these type of people that are low-level people in the organization and you send them an application without the Social Security number, they're all going to tell you you have to put it on there. And a lot of them don't know any different. Like, they just think it's weird that you're submitting an application with no social. They don't even know it can be done. So they tell you it cannot be done. You cannot apply without putting your Social Security number on the application. But you have to keep in mind, no matter what any person tells you, you need to apply and leave the Social Security number blank. Now, keep in mind, no matter how good your business credit is, you will never get to a point where you start receiving applications without socials. Every application you ever get will have the same spot for a Social Security number, no matter how much credit you build. The key is that you want to leave it blank. Now, it's going to feel weird. It's going to feel uncomfortable because every application you've ever filled out in your life for financing, you've always put that Social Security number on. But if credit is built based on your EIN, you don't need the Social Security number. What's going to happen when you leave the social blank is they pull your EIN credit to determine approval, not your personal credit. So when you apply using that Social Security number, you have to understand that almost always you're giving a personal guarantee. And we run into this a lot. We'll talk to some people about business credit, and they'll say, yeah, we have business credit established already. And then we'll help them pull their business credit report, and there it goes. There's no business credit established. And they say, I don't understand this. I've applied for credit before in my business name. And we always ask the same question. Of course you did. But did you apply and leave your Social Security number off the application, or did you include it? Matter of fact, have you ever applied for money and left your Social Security number off the application? They'll say, nope, never done that, and that means you have a personal guarantee. If you put your Social Security number on an application, they're going to pull your personal credit, and you're personally guaranteeing that debt. It's not truly business credit. So one easy way to know, again, is that if you have business credit already, is did you apply without your Social Security number? That's it. So even if you think now, well, Ty, I have business credit established. Just because you have a debit card with your business name or a credit card doesn't mean this is real business credit. If it was, you applied and left your Social Security number blank and still got approved. If you put your social on there and you sign that application, you personally guaranteed that debt, and it's not truly business credit. That's the determining factor. Did you apply and leave your social off the application, or did you put your Social Security number on there to apply? If your social was on there, then you have a personal guarantee, and it's not truly business credit. True business credit doesn't require a Social Security number in most cases to qualify. And I say in most cases because there are some sources that will refuse to give you credit unless you personally guarantee. They're out there. But the majority of business credit building sources out there will not require a Social Security number, which is why you must leave your Social Security number off the application to truly secure real business credit. Business credit is using your EIN to qualify for credit, period. That's what business credit is. You use your EIN to qualify, not your social. So when you have enough credit built for your EIN, you can then get approved without providing your SSN. Now this is important because you can't just go in and get your initial credit this way unless you go to the right sources, which I'm going to talk about in a minute. So you need to build a little credit linked to your EIN. Once that little bit of credit is built, when you start getting into revolving credit, when you start getting into Visa, MasterCard, you need to leave your social off the app and let your EIN fight for itself. Let it stand on its own to get you credit. It's the only way you get business credit, only way you grow business credit. If you provide an SSN, your personal credit will almost always be pulled. Another big thing you must know. Look, I get this a lot. Ty, I've watched your webinar. I've seen your video. I followed the steps. I went in and applied, and I got denied. Here's my first question to them, always. Did you put your Social Security number on the application? And almost always the answer is, well, yes, I did. Well, then you must have bad personal credit, right? Yes, I do. That's why you got denied. When you put your social on the application, not only are you giving a personal guarantee, but in most cases, well, excuse me, in almost all cases, they're also pulling your personal credit, which means your decision of approval isn't strictly based on your business credit anymore. Now it takes your personal credit into effect. You don't want to do that. Real business credit has no personal guarantee, no personal credit check. The only way you can get real business credit is to apply without the social. If you put the social on the app, it's not really business credit. That personal credit will then be used for the approval decision if you put it on the application. So if you have any kind of credit issues whatsoever, it's essentially important that you absolutely do not include that social on the app, or you have no chance. It's just like applying using for personal credit at that point. So leave your social security number off of that application. The key to getting approved with no personal guarantee or credit check is to apply without providing the social security number. Without providing the SSN, there cannot be a credit check. Think about that. If you apply and you don't put your social on the application, they can't even pull your personal credit. So when I'm telling you that business credit is credit that's established based on your EIN, not your social, this is exactly what I'm talking about here. Because if your social isn't even on the application, then they can base none of their decision based on your personal credit because they don't even have the ability to pull your personal credit. So this newly obtained credit can also be reported on your personal credit only, or the newly obtained credit also can't be reported on your personal credit, only your business credit. This is another reason you want to leave your social security number off of the application, is because if your social's on the application, you stand a good risk of getting credit that's going to basically be reported on your personal credit. That's not business credit. You want credit that's reported on your business credit reports, not your personal credit reports. If you use credit that's linked to your business credit reports, or if you apply using your social security number, then this credit very well could be put over on your personal credit reports. That's not what you want. Let me explain why this is a big deal. A lot of people don't realize that 30% of your consumer credit score is based on something called utilization. When you use more than 30% of a limit of your credit card, your scores go down. So if you have a $1,000 credit limit and you use anything more than $300 balance on that card, your scores go down. So if you have these accounts reporting on your personal credit, as you use them, your personal scores go down. You don't want that. With business credit, not putting your social on the application, that credit reports to the business credit reporting agencies, and you can max the cards out and have no adverse impact on your score. Another reason you need to leave that social off the app. Most credit issuers, again, will approve you without your SSN if your EIN credit's strong enough. If your EIN credit is not good enough, you might be declined, and they then might ask for your social. No harm, no foul, right? You don't lose. You leave the social off, you apply, you get approved. If you leave it off and you get denied and they say there's not enough established credit, well, then you can use your social at that point if you want to, or establish more credit and apply again. No matter what, any credit representative tells you, though, credit can be obtained based on your EIN only, not your social, and don't feel they're lying to you if they tell you differently. In most cases, they just don't even know themselves the reality. So this is a very, very, very big reason people fail getting business credit. You really want to make sure that you apply using your EIN and leave your social security number blank off the application to stand the best chance of getting approved. Now, another reason that people fail building business credit is that this is probably one of the biggest. They apply for credit in the wrong order. They go into Staples, they go into Lowe's to try to build their initial credit. Well, you have to obtain vendor accounts first. See, a business credit report can be started really the same as a consumer credit report is, with small credit cards. Now, in the business world, these credit cards are called vendor accounts, and they're basically used to help you get approved for like small limit credit cards to help you build your initial credit profile. So here's the deal. If you walked into Staples today and you had no personal credit and you applied, they would turn you down because Staples is not a place where you get initial business credit at, nor is Target or Lowe's or Walmart or any place. But if you went and got like a secured credit card or 2 secured credit cards, paid them as agreed, then you went into Staples, Staples would give you a personal credit card. It's the same thing in the business world. If you go into Staples with no credit, they will deny you. If you go into Staples with 2 or 3 established vendor accounts, then you have profile, then you have a score, then you have trade lines, then you can get approved. So a vendor account is basically a credit account that's like a 30-day, 60 or 90-day term. Most of them are 30-day terms. So this means like when you purchase something from them, you have to pay them off in their entirety in 30 days or less. So for example, if you buy like $300 worth of goods today using a vendor account, then that $300 is typically due back within like 30 days. That's what a vendor account typically is. So you can get products and services for your business that your business needs and defer those. There's a lot of services out there, like I'll give you some examples. Uline, Quill. These are companies that will reliable office supplies. Reliable office supplies will let you go in. They'll give you a vendor account. You could buy like $200 worth of stuff using your vendor account, and you just need to pay them off within 30 days. But the beautiful thing about a company like Reliable is they then report that to the business credit reporting agencies, and you get a trade line out of it. But not to mention the benefit. I mean, if you're starting a company, to be able to have 30 days to pay the bill is also beneficial. So you get that benefit on top of getting the benefit of building your business credit. And some vendors will approve your company, based on payment terms for as little as an EIN and 411. And I mentioned this earlier. These are the two essential things you need. If you have an EIN and 411 listing, then you really stand a good chance of getting approved, because they'll approve you for vendor accounts initially, and you have those two things, and you meet their simple qualifying criteria. So when your first accounts report as trade lines to Dun & Bradstreet, the DUNS number will automatically activate your credit profile if it's in already. The same for Equifax and Experian. Why am I telling you this? I just saved you $800. You're welcome. If you go to Dun & Bradstreet or they ever call you, they're going to tell you it's $800 to $1,600 to get your DUNS number. It's crap. It's not true. It's not accurate. What happens is the minute you have vendors that report to the Dun & Bradstreet, they'll give you, they will automatically basically activate your credit profile. So don't let them charge you for your DUNS number. It's free. You can get it for free. Don't let them try to convince you that you have to pay for it to activate your credit profile. It's just absolutely not true. You can absolutely build business credit without paying Dun & Bradstreet for it. You just need to get a few of these vendor accounts. When they report, your credit profile will be activated. You need to have about 5 payment experiences to be able to get revolving credit accounts. A payment experience is the reporting of an account to one agency. So if you get approved with an account that reports to Experian and Dun & Bradstreet, well, then that's 2 payment experiences. So you need about 5 of those payment experiences to get revolving accounts. Some vendors require an initial purchase. Uline is like this. Uline makes you buy some stuff first before they give you the credit line. Well, that's cool because they're a service you can really use, and it's worth it. You buy some stuff for cheap for them, and then they'll give you a credit line like in 30 days or so. And your vendors don't have to meet 100% of your needs. Look, you might not use Uline for office supplies or Reliable. You might use Staples. But in this case, you might have to get off a little of the beaten path and go through a source you wouldn't commonly use to get your initial vendor account set up. But it's well worth it when you do so. So what I'm going to go ahead and do right now is I don't know if I have enough time, because I do actually have a webinar coming up here, but I am going to try to show you, if I have time here, exactly what I'm talking about. I think I know the password here to get in. Okay, so what I'm doing, okay, let me see. I might not be able to do this. I was hoping to be able to show you, but somebody might have changed my password, and if that's the case, then I don't have time to show you today. Oh, look at that, I can get in. Okay, so I'm going to show you, what I'm doing is logging into our Business Finance Suite right now. This is the system that, basically our resellers use to offer business credit financing to their clients. And let me give you an example of exactly what I'm talking about. I've only got a couple minutes here left, but I'll give you a good example of what I'm talking about. So, Staples. Staples is one of these companies that I see a lot of people apply for. Let me see if I can make this bigger too. There we go. Okay, so I see a lot of companies apply for Staples and try to start building their business credit. But for example, with each source that we have listed in our system, we basically list the underwriting requirements too. So let's look at this. They will verify 411 and that you have an EIN. Okay, it's very easy to get approved, but they will check that your business credit files are open with D&B and Experian. They also check to see if your business name and address matches 411. If your business does not have previous business credit established, they might require a personal guarantee. Bottom line, If you went to Staples to get money and you had no trade lines with D&B and Experian, you would be denied. Okay, the same thing with Office Depot, Shell, and almost every one of these sources. You have to have some trade lines to get approved. So instead what you'd want to do is you'd want to go to sources that will actually approve you. And here's a bunch of them, okay? So you're going to see a lot of these. Maybe you can write down some of these. Lachlan and Associates, they sell corporation services. They'll approve anybody. You have an EIN 411, they'll approve you, and they report to Experian. Pretty cool. This one, don't worry about. They only work with our clients. Creditera is another one. Creditera is a very good one. You can get business credit monitoring through Creditera. It's like less than $50 a month, and you get 2 payment experiences because they report to D&B Experian. That's just like super cool. You can get some of your personal reports, your business reports, and they report and give you a trade line. Pretty cool. Quill, Reliable, Gimplers, okay, Uline. All of these, a lot of them do office supplies. They will approve you for vendor credit. This is the kind of credit you have to get initially to get approved. A printer for you, okay? Amsterdam Printing, Monopolize Your Marketplace. Now, Anderson Legal Business and Tax Advisors. So these are the kind of sources that will approve you for business credit. Now, some of them have services you might use. Some of them have services you won't use. But when you get a few of these accounts, you get 5 payment experiences. Meaning they report to D&B. There's 1. They report to Experian. There's 2. They report to D&B and Experian. Where's that at? That's 3 and 4. When you get 5 of these payment experiences, you have a trade line, you have profile, you have scores, then you can go into Staples, Office Depot, and those type of places to start getting approved. So that's exactly what you want to do, is you want to make sure that you don't fall into this rut and start to go to Staples to try to get your initial credit started. It just will not work if you do that. You need to make sure that you apply for vendor accounts first, and if you do so, that is how you can establish your initial business credit. Now, I know I have some questions in the queue here, but unfortunately, I just don't have the time today to answer them. I'm literally getting ready to go from this webinar to another one. So here's my email address. Feel free to email me with any questions that you might have. Okay, there's our phone number too, 877-600-2487. My email is ty@creditsuite.com. If you want, just copy the question that you have in the question box and just paste it to me in an email and send it. I will make sure your questions are answered. I just don't have enough time in this webinar to be able to get those questions answered. So you can also learn more about business credit financing, offering business credit financing on our main website, creditsuite.com/business credit. On that one page, you'll be able to get all the information you would want and need about being able to offer business credit financing. So again, this is Ty Crandall. I want to thank you very much for checking out this webinar. Hopefully you got a lot out of this today. There's just 3 main roadblocks you really want to make sure you avoid. You got to make sure you set up your business credibly. You need to make sure you do not apply for this credit using your social. And you need to make sure you get some vendor account established first. Today I gave you like 10, 12 sources, so should give you a really big leg up in this process. If you follow those 3 things, if you make sure that you do or don't do those things that we talked about, then you're going to be in good shape. Just don't use your social. Make sure you're set up credibly, and make sure you go in and establish your vendor accounts before you start applying for your store credit, and that should help you basically get your business credit established and be well on your way to success. So I'm going to go ahead and wrap this up. I do have another webinar to jump into, but I want to thank you very, very much for taking the time to attend this webinar. If you do have any other questions I can assist with, feel free to reach out and let me know. Thank you so much. Hope you have a great day.